All right, let's get started.
All right, let's do it. I'd like to thank everyone for joining us for this PPP loan forgiveness webinar. We will keep this as informative as possible. We will be referring from time to time to our previous webinar, as that had included quite a few case studies that we didn't want to recycle here for the sake of time. My name is Sal Cura. I'm a partner in the assurance department and outsourced accounting. Along with me is Leo Zhang, accountant in the outsourced accounting department. Pleasure to meet everybody. Let's get going. Here's a quick disclaimer, and we do have one pop-up question just to get started. If you want to throw that up, please.
Okay. All right, so you will see there's a pool question coming up right now. Please answer so we can understand which entity we should focus more.
Give you guys 10 seconds to answer that one. You want to throw that down, Leo, and let's get started?
So we still got we only got 60% of people already voted.
Okay.
Give them 10 more seconds.
Sure.
All right.
And everyone, as you're submitting your questions, we're going to try to get to those at the very end. So please we're not trying to skip over those. And what we don't get to, because I doubt we'll answer everyone's questions, we will try to get to those. We'll email back or email us directly, and we'll try to answer whatever we can.
Okay. So let's end the poll.
All right.
Okay, so we have 35% of people vote for S Corp, and then 26% vote for C Corp. So we will focus more on the corporation side and get started.
Yep. Okay, so the agenda, we're going to start with some current events, some changes in the act, the final ruling, and some additional rules for forgiveness and some Q&A. With respect to current events, a few things going on there that I just want to touch on. If you're reading the news, you're knowing that there's a second stimulus package out there. Something that's been picked up, and I think very possible, if I had to put numbers on it, I'd probably say 60-40 that'll happen if the stimulus gets passed soon, is potentially a second PPP loan. That PPP loan, though, would be targeted. There'll be a lot of different rules you'll have to show, and I don't know how it'll work, but you'll have to show a 50% reduction in revenue. You'd have to have under 300 people, employees, and then you potentially get a second PPP if it does get passed. I guess it'd kind of be good and bad, right? I mean, it'd be great to get a second PPP, but it would be terrible to fall in that 50% down in revenue category. So that's the current events. The other piece is there might be some changes with the deductibility. We're going to go with what's out there now with respect to the expenses that are forgiven. And there's some chatter about changing this whole forgiveness again and potentially doing certifications, depending on how much was, taken out. But we're going to go with the information we have now. I do believe that we will have one more webinar once banks start accepting applications. Although there's applications now, I am unaware of any banks that are accepting forgiveness or have granted forgiveness to you. So let's go. All right. Oops, sorry, that's so one of the biggest changes was going for 8 weeks to potentially 24 weeks. This is huge. That was part of the new legislation that got passed. A lot of things stayed the same. Payroll costs per employee were maxed out at $100,000. And the other piece that changed to was the 60% is the minimum now. Before it was 75%. Now this is a huge deal because a lot of folks were, sorry, I got my window open, so I'm gonna hold off until this, oh, they never had a plane fly this close, I apologize. So it's 60% now, that's changed from 75%. And that's a huge deal because some folks just couldn't spend it on all payroll. Now do keep in mind, the fact that they switched it to 24 weeks, I would definitely say that I would gear more towards using payroll because I think that's a lot more straightforward. So we're going to get into all the different expenses that can be used, but I would probably utilize the payroll because I think that's more black and white. And you can use still up to 100% of payroll to be forgiven. So although the numbers drop to 60%, we can utilize up to 100% of this for payroll. So please keep that in mind. I'll jump through these hoops real quick. Alternative covered period. It's going to be what most people are going to utilize, and this is what I recommend, is the first day of the payroll cycle following the time you receive the loan. So if you receive the loan on Tuesday and your payroll cycle starts the following Monday, I would use that as a payroll cycle. Otherwise, you're going to have to start doing some cutoff items. Another big thing that's changed, and I'm not seeing some of these slides. Another thing that's changed is the maximum compensation. Because this thing has been drawn out to 24 weeks, the maximum compensation for an employee is about $46,000. That's huge, but that's only if you push out the 24 weeks. If you're not using the 24 weeks, you're gonna do $100,000 divided by 52 times the number of weeks. Now for employee owners, and owners are folks with 20% or more, that's its own calculation. And we're gonna dive pretty deep into that because I think most of the folks on this are on their payroll. But I'll keep it quick. So if you're gonna run with the 8-week piece, you're still at 15,385 as your max. If you're gonna go to the 24 weeks, your maximum would be 2.5 divided by 12, your 2019 compensation. Okay, real quick, that's 2.5 months, exactly what you applied for in the beginning. And the reason it's different for owners is because they're trying to minimize any kind of enrichment for owners. That number is going to be capped out at $20,833. So that's the piece on that one. Go to the next slide.
So thank you, Sal. And then I will cover those payroll costs on top of the regular wage we are paying to the employees, which will include the health insurance, retirement, and employer level state taxes. So how are we gonna calculate the health insurance part? So there will be easy way. There will be just take the total cost you pay for the health insurance and subtract what the employees put in. And the remaining part will be the employer portion. And then as for the retirement, that will be the employer match on the retirement plan, such as 401k. And that portion is part of the forgivable expenses. And employer level state taxes is straightforward. And then let's move on to the next slide.
All right, so here to me is one of the more important slides. They're all important, but this is the big one for the owners. Kind of touched on this about 2 minutes ago. So the owners have their own deal here. And that piece would be for an 8-week period, your maximum is going to be $385. For the 24-week period, it's going to be $2,833. If you're a sole proprietor in all of this, I still recommend moving over the money. I'm going to be real clear about that. For C Corps and S Corp, you're going to use your wages. This is all, these pieces I'm talking about now, or if you're under $100,000. If you're over $100,000, you're going to be capped out at 100 anyways, so this is not important. For partnerships, you're going to take your 2019 self-employment income, you're going to take out 179 expenses, you're going to take out your portion of Social Security, and that's going to be your max. If you had unreimbursed partnership expenses, you're going to take that out as well. So that's the more complicated one for partnerships. Hopefully everyone's above 100,000, so they don't have to deal with any of this. Schedule C, you need your Schedule C income, obviously. That's going to be your max. For health insurance, kind of like Leo just touched upon, you're only going to for C Corps, you don't include that for the Schedule C's, partnerships, or S Corp owners. The retirement ones, you're going to include that for C Corps and S Corp owners, but don't include that for Schedule C and 1030 on the partnership people. That gets a little tricky, right? So probably stare at this for a second. Hopefully everyone's above 100,000, so it's not too crazy. But if you're not, you're going to take what you had last year, call it 50, you're going to divide that by 12, and then that's going to be your maximum. All owners cannot make more money in 2020. For the PPP at least. Obviously, you can make more money if your business went up, but you cannot max out the forgiveness there. So if your earnings in 2019 were $60,000, so $5,000 a month, that's what you're going to be capped out at. All right. I think that covers this slide. Next slide.
All right, so, okay, before we get into the non-payroll costs, there will be the second poll for today. It will ask you about which expenses you're most concerned about, so we can get more detail into those. And this one will be for multiple choices, so just pick the one. You can pick more than one answer for this question.
I want to talk about this as people are deciding. What expenses are you most concerned about? If it was me, at least what I'm seeing, and I'm going to take a guess who this is going to be, I would probably say it's going to be payroll, just because you have the thresholds and then you have certain caps and so on and so forth. That would be my guess. Because I think if you can lock down payroll properly, you should be able to get 100%. Right.
Yeah, so let's see the results. So
nice.
86% of people who vote for payroll, and then so payroll is the most important part, and then we will also cover the remaining. It looks like nobody is interested in mortgage interest.
Let me ask you, Leo. I didn't answer that question, so I guess they could put multiple ones because that added up to way more than 100. Anyway, I guess they could put multiple ones. Okay, great.
Yeah. So, all right, let's go over the non-payroll cost. So for non-payroll cost, it will be rent, mortgage interest, and utility. So for the rent, it will also include your lease. It includes your lease of equipment, lease of vehicle. Those are also included. But one thing to keep in mind is for both those lease, rent, and mortgage interest, you have to have that agreement in place before February 15, 2020 to have those expenses to be eligible for the PPP. Otherwise, they are not. And then for utility, those will be electricity, gas, water, telephone, internet, and transportation. So for electricity, gas, water, telephone, internet, those are pretty straightforward, which you will need to keep your bills, the gas bill, water bill. And as for transportation, those will include like Uber, Lyft. If you're taking train from home to work, those will also include it. but you have to document them well because that will be part of your application. So as we know, and Sal also touched base on that, the payroll need to be at least 60% to get it all forgiven. But the payroll can also go up to 100% since they already extended from 8 weeks to 24 weeks. So I believe most of you and most of our clients can use the payroll to cover 100% of the PPP loan. So if you already use that all the money for payroll, it would be great. If not, you can also consider those non-payroll costs. But non-payroll costs, it can't go over 40%. If you use that over 40%, the remaining amount is not forgivable. And then let's move on to the next slide.
Thanks, Leo. And again, the purpose of this is to hopefully maximize the forgiveness within the rules. So here's something that can reduce the forgiveness. Again, let's just step back for 1 second and realize that the PPP program was to keep and maintain FTE headcount. So these employees don't go on unemployment. And we did a case study on this on the last webinar, so you can go back there if you want to see like examples. But the idea here is you're going to have a look back period. So you're going to look at your covered period, and that's going to be what you decide. And then did you maintain your payroll when compared to January 1, 2020 to 2/29/2020, or February 15th, 2019 to 6/30/2019. And if you maintain your payroll, then you don't get hit or a haircut for forgiveness. If you didn't maintain your payroll, you might have a problem. We're going to get into, they have some waivers on that, and we'll get into that. And I think the 6/30 number was because everyone thought the pandemic would be over by 6/30. That's not the case. So this I could see changing. A lot of this stuff I think may still change, but these are the rules we have now. So the whole thought process is to maintain your payroll. So if you laid everybody off and didn't give them the opportunity to get rehired and aren't included as part of these exemptions that we're going to talk about, you're going to have some issues. So please keep that in mind. So hopefully that makes sense. And we can get into details later if you have any questions on that. Go to the next slide. So here's, we touched on this before. If you had laid somebody off, say before you got your PPP loan, and then you offer them to come back, that's not a hit for you. That's not, you don't, it's as if you did not lay them off. Just make sure you have that stuff in writing, and you need to have documentation that you reported that to the unemployment bureaus. Again, the thought of this PPP was to minimize folks on unemployment. Now, here are the two new ones that came up outside of that. If you lost somebody but had an inability, or you have an inability to replace certain employees that were let go, and you're willing to certify to that, that'll grant you an exemption. And another type of exemption is if the inability to restore business operations to February 15th, 2020 levels due to COVID-19 related operating restrictions. That would be guidance from the CDC, the Health and Human Services, OSHA, is what I'm understanding that is. So I think they're kind of gearing towards if you had a restaurant that was strictly indoors, or just indoors and outdoors, and you can't service people indoors, there's no way to maintain that business. I think you're under a restriction. I imagine they're going to have more guidelines for that. So that'll help tremendously. That's two things. And then keep in mind, I really want to stress this. the more rules that have been coming out for the benefit of folks who took out these loans. I truly believe the SBA is doing everything they can to allow these loans to be forgiven. You just need to shore up your documentation and follow the rules. So I haven't seen any rules that come out that are making it more difficult for forgiveness. Let's see. Let's go to the next slide.
All right, thank you, Sal. So before we get started in reduction in loan forgiveness because of the wage reduction, we got questions asking if an employee asked to have hours reduced to below 40, will I still be able to count it as one full-time employee? The answer is no. So you can either count it like as the prorated, or you can count it as 0.5. So if like that employee is below 40 hours, then it's not as one full-time employee. Okay, let's get into this. So reduction in loan forgiveness, because wage, as we know, we can't drop anyone's wage more than 25%. Otherwise, the loan forgiveness amount will be deducted. So before we actually do the calculation, there's two groups of people we need to take out. So the first group is the people who earn more than 100,000 in 2019. So for those employees, those are excluded from the wage reduction calculation. And then the second part will be for whoever the annualized income at 2019 is over 100,000. So what's the difference between those two groups? The second group, there will be like, for example, there's an employee receive $10,000 of commission or bonus in December 2019. If you annualize that, that will be over 100,000 as of 2019. So no matter what this employee earned from January to November, as long as for one period and you annualize that, that's over 100,000, then those employees will be excluded from the wage reduction calculation. And then the remaining employees, those will be need to do the calculation, just need to make sure in 2020 you don't reduce their wage over 25%. We did a case study on our website during our last webinar. You can always go there and look at that video. Our website is CAPATA, CPA.com. It's CAPATA, CPA.com. We don't want to repeat that case study here. And if you're interested in that, just go on there and watch the video. And if you've got further questions, you can always feel free to email us. We're happy to help. Let's move on to the next slide.
Okay, this is a big one that I think most folks are interested in. Keep the documentation years. That seems like a weird number to me. I don't know why it's 6 years. I think they know there's so many people out there that took these loans out that it might take them 6 years to get to it all. But this is something that all the clients that I've consulted with, I talk about, let's get a binder going together. So get a binder together, almost like your audit binder, if you will, and have it ready to go in that event you do get audited down the way. And let's keep that binder for 6 years, and then after that, you can toss it. If the loan is not forgiven, you're talking about a 1% interest rate. Depending on when you got the loan, your terms could have been anywhere from 2 years to 5 years. I'm pretty sure the bank, if you just call them, if you didn't get it forgiven, will grant you the 5-year piece. And then the next piece we want to talk about is the taxation of the stuff that was forgiven. So if your if you got $100,000 and you got the whole thing forgiven, you will not be taxed for loan forgiveness. However, those expenses that were forgiven are no longer tax deductible. This may change. Again, things have been, if you've actually kept up with this at all, things seem to change every couple of weeks, sometimes even every couple of days. So, but as of right now, that's not, your expenses that are forgiven are not deductible. This thing changed a bit too here about payroll taxes. You're able to defer those through the end of the year, even if you're on the payroll protection program. Call your third-party payroll provider and you can have those deferred through the end of the year. That's kind of a nice little benefit. So these are the pieces that I would talk about, documentation. And we'll you know, what I suggest doing again, excuse me for repeating myself, is just put together that binder. And maybe have us or someone else review it, a quick mini audit on it, say, okay, yeah, this ties out, it all makes sense, and just have that ready and on the side. Because I do think there will be audits on these, and it might only be 1% of folks who participated in this, but you're talking about a lot of money that you may have to pay back if you don't have your information shored up. Let's go to the next slide.
All right, so this is the actual application. So this is instruction for the loan forgiveness easy application instruction. That's a form 3508 easy, and this will tell you the instruction and the requirement regarding like how you can apply for the forgiveness. And then Sal will also go over the actual form with you, like on the next slide.
Yeah, so thank you, Leo. So yeah, this would kind of show you the qualifications. There was just no way to do the 8 of this piece. And then here's the first page of the, this is the first page of the application. It is much simpler. I want to be clear. This is much simpler than what was out there, I think just 2 months ago or so. And some of these will be straightforward. Some payroll providers are able to shoot out general numbers on the bottom. I don't believe those you'll need some adjustment to those if folks were laid off and didn't come back to work, even though you asked them to, or you couldn't find quality people to replace those. But the form isn't too difficult, but it just takes a little bit of time to fill out. We're happy to answer any questions with this piece here. But if I was in anyone's shoes, that, you know, start gathering this information. Get your PPP number, you know, gather all this info that probably came from, some that came from your initial application. If you got an EIDL advance, grab that information. Let's get all this prepped, because I don't know the window of time when the forgiveness actually opens up, because everyone's going to be rushing, and we need to get your loans forgiven if possible. You know, let's get it lined up, especially if you want us to review or have someone else review it. I would definitely recommend starting to fill these things out. I don't believe they will change that much. All right. I think that wraps it up. We want to jump into questions and get those. So these questions came up before we started the webinar. We have some live questions that came in during the webinar. So these ones came in before the webinar, and we've answered them, you know, if you were listening to the webinar, but I'm going to answer them again now. What are my maximum wages I can include if I apply for forgiveness before the end of 24 weeks? All right, well, if you're an owner, the maximum would be either $20,833, Or if your wages were under 100,000 last year, it would be that maximum times 2.5. If you divide it by 12 times 2.5. Hopefully that makes sense now. If you're just asking about one of your employees, when you say before 24 weeks, you need to, I mean, if it's 12 weeks, you do 100,000 divided by 52 times 12, there's your maximum. So hopefully that answers your question. And if you go back and listen to this webinar again, you'll understand the calculation there. Let's go to the next one. Can I include the entire first payroll paid in my covered period, even though the employees earned the wages prior to the start of my covered period? The answer to this is, it seems like yes. If you are on the regular covered period where the 8 weeks where you don't pick the alternative cover period, it looks like you can. I don't recommend it because I think it's going to get weird depending on the timing, is if you're including a payroll that was completely earned prior to the receipt of any funds. So you got the funds on Monday, but your payroll cycle had just ended that past Friday, and then people got paid on that the following Thursday. So they got paid for earnings way before the covered period. I don't recommend doing it because I don't think you have to. I would be as conservative as possible when applying for this. But if you need to, I think it will be acceptable. Let's go to the next slide. Can I include my 2019 accrued profit sharing? There is nothing in the literature that we're seeing that says no. But again, I feel like this is one of these gray areas that's a little more aggressive than we need to use. I think there's a lot more opportunities that are black and white to maximize the forgiveness. So can you use this? Yes. As of right now, they'll probably get clarity on there. And the reason I say this is I want to minimize, and I don't think anyone on this webinar would do it, but I want to minimize opportunities where other folks would abuse the rules, and then they kind of stop it and change it and scrutinize. So let's I would recommend everyone, if they can, use all the black and white ones. So let's do the next slide, please. Do I need to keep my full-time employee count threshold level through 12/31 if my covered period ends before then? Or if I decide to apply for forgiveness before the end of my covered period? That answer is no. Guys, I am so sorry. This is so strange. My house is always the quietest, but someone just bought a Harley next door. 1 second. At least you know we're live, right? So, so I would say no. You don't have to do that. It doesn't really make sense, right? Suppose you ran out of money or spent all that money through October 31st, and you don't need the need for the folks, and you left them on because of the PPP. There's no expectation that you'll keep them on. And before I jump into a couple other slides, I want to touch base, and I think Leo touched base on this a little bit before about hiring employees, relatives that are employees. Be very careful with that. I've heard quite a few things on that. So just have that documentation very buttoned up. It's going to be super important. I'm back. All right, next slide.
All right, so are the expenses linked to loan forgiveness able to be deducted for tax purpose? I think Sal has already mentioned that like earlier today. So those expenses which you use the PPP fund to pay for, those are not considered as deductible for tax purpose. Because when they launched the PPP at the beginning, those are not or double dipping for tax purpose. So if you use those loan to pay for those expenses, you're not gonna take those expenses again when you file a tax return. Okay, let's move on next. Can I include rent I pay to real estate company owned by the same person that own the operating company? So the answer is yes. No matter who is the owner of that building and who are the tenants, as long as you have that lease agreement before February 15, 2020, you are in good shape. All right, let's see next question. So all those questions, we received those questions before our webinar. We are gonna cover all those questions first, and then we'll also answer those live questions. And this question is, can I hire my children, relatives, and have their wage count for forgiveness? I think Sal just talked about that. So the short answer is yes. If your employees decide to collect the unemployment instead of working, and your relative or your children is capable of doing their job, of course you can hire them and they can work, they can be on a payroll, and they can be part of the forgiveness. However, if you want to hire your children and relatives just because this PPP is free money and then you just want to take the money, we would not recommend that. And because when you apply for the forgiveness, they will ask for the documentation, and also for children and relatives, you need to keep a note for the reasons and keep it for 6 years in the binder, or keep it like electronically, like because the SBA have 6 years to come back and ask you any question they want regarding this application. So let's see the next one.
Yeah, real quick before you go on the next one. Yeah, I've seen on message boards people talking about putting their 3-year-old daughter on websites and obviously their work website, and paying her as an advertising fee and as an employee. Like, don't do stuff like that. You know, unless your kids were employees last year, I would try to minimize that. Now, I understand there's going to be situations where you couldn't hire anybody, and maybe your son or daughter lost their job and you want to help them out. I think that makes sense, but that's going to be closely looked at. That's going to be very closely looked at. So just be aware of that and have that buttoned up. Have their HR file buttoned up. So yeah, sorry, Leo.
Okay, so let's move on to next. So now we'll answer the questions on the Q&A section. Feel free to type in any questions you have, and then we'll answer those questions which most people ask.
Yeah, I've seen a couple here about the EIDL and PPP and how those come together. The EIDL is a lot more flexible. You can pay a lot of past bills that were outstanding. But if I was in the shoes of, hey, I got this PPP loan and I got this EIDL, I got this PPP grant, hopefully it'll be a grant, not a loan. I got this EIDL piece. Use the PPP and exhaust it first for payroll and all that stuff, and don't intermingle the two. We want to make this as clear and as audit-proof as possible. That would be my recommendation. Okay.
And then we got a question says, do you have any guidelines regarding 1099 employees? So 1099 employees are not covered in this PPP loan. So for 1099 employees, they need to apply for the PPP themselves. you can't use this PPP fund to pay for 1099 employees. Okay.
I got a question here. Someone's asking about what services we provide with respect to forgiveness and the cost. Well, every situation is a little bit different depending on how your records are done, and we've done this for quite a few folks already, is prep their binder, is what I like to call it. We're happy to discuss this further with everyone. You can reach out to me or Leo directly if you'd like. We have our emails on the back. But yes, this is definitely a service that we do provide. Can't really kind of give a quote online, but we're here to help, that's for sure. And here to answer questions, that's for sure as well. So.
Okay, we got a question. Does the entire lease agreement need to be submitted, or is the cover page adequate? So I think the lease agreement, you will need to have the full lease agreement with your signature on it. Only the first page is not gonna be enough, because they will need to see the terms of the lease and the signature and the dates. So I think the lease agreement, if the first page, they come with the terms, dates, and signatures, that would be good. If you don't have all those information out there, I would suggest you to get the full lease agreement.
And obviously keep your canceled checks. And that, I think that's going to be a real big key to all this. Keep all that documentation, the canceled checks going on. And then, you know, I think Leo touched on this already. Those leases had to have been in place prior to February. So nothing fresh, you know, you probably even same with the cars and all this other stuff, you know, just, I would truly minimize anything that's gray. I think with this 24-week piece, it gives you an opportunity to kind of minimize all the gray and keep it with payroll, probably keep yours, you know, full leases. You know, we had some questions about cars and leases. Yeah, those are acceptable. Now, could someone ask a question, well, do you have a secondary car, or is that strictly your business car? You know, those are questions that I think could arise. So hopefully if you're deducting 100% of your car lease for your business, you have a second personal car to drive. And if you don't, maybe you're doing an allocation percentage. These are the things I think there's no need to be aggressive, because the rules are loose enough on the payroll side and the timeline is so great. I mean, think about it, you got 6 months, 24 weeks, but when you obtain the loans, they were only thinking 2.5 months. So they've extended this so much that it should be relatively straightforward to get fully forgiven.
Okay, let me take the next question. My honors are on my employee, not on my employee. Take an honors drawer every pay period. I have included their honor drawer amount in my payroll calculation. Is that wrong? So it depends on the entity type of your organization. If that's like a corporation S corp, and then your owner is not on the payroll, then the owner's drawer is not part of the forgiveness. If your owner, like the entity type is Schedule C, and then whatever she earned, it will be part of her forgiveness. So it really depends on entity type. I hope that answered the question.
I think we got time for maybe a few more questions. Let's see, what do we got here? Let me pull it up. Okay, many of the payroll providers have a form that will calculate what you need in order to fill out the app. And can we utilize those? Yes, I would say there is quite a few payroll providers, the bigger ones, that do have a lot of this information, and I would definitely look at that from now. So folks that I'm familiar with have those. I know ADP and Paychex have those. I would strongly suggest logging in, running it, putting your information in there. So that would be your covered period when you got it, and it'll actually spit out if you met the requirements. Now, if you didn't, there's still an opportunity that obviously ADP doesn't know who was laid off, and if you try to rehire them and they weren't rehired, so some of those things may not be completely accurate, but you may remember who those folks were and then adjust that, and then be able to get 100% forgiveness. So it's pretty easy. If you don't know how to run ADP or paychecks, we're happy to help with that real quick. That's like probably a 5-minute exercise, just to log in real quick. So I keep looking, I'm looking for multiple questions that are together so I can knock a few of them out. Leo, I'll look for a few more good ones, and then you want to answer one right now.
Okay, I'm taking my last question for today. So the question is, I have an employee that was out in 2019, and then her wage was lower than 2020. Is our forgiveness amount limited to what she earned in 2019? She will make over 100,000 in 2020. So for this question, the loan forgiveness is not only think about each individual employee. So for example, you receive the full amount of 100,000, right, of the loan, but so that loan amount will cover all the employees. They are not like seeing each individual employees. And also in your case, you are increasing the salary of these employees. So that's okay. But one thing to keep in mind is you don't want to increase one employee's salary just because you want to get everything forgiven. For example, one employee last year, like she was earning 50,000 as like a regular staff, and then the next year you're paying her 150,000 as a executive. Like in a year, there's 100,000 jump. So those doesn't make sense. So whatever you put like into the application, just think about it. If it makes sense and you have the reasons for that, just put it on and it should be good.
A couple questions here I'm reading. People are asking a lot again about the EIDL. And does things change if you have both things? The forgiveness of the PPP does not change when you have the EIDL loan, but you definitely don't. You want to exhaust the PPP loan for the items we described before jumping into the EIDL money. So hopefully that makes sense. I got another question here. Explain the 24 max for owner's payroll of 28,330. Okay. This is across the board, right? So this is sole proprietor across the board. The maximum you're gonna get on payroll was always per person was 100 grand. For owners, if they went for the 24 weeks, the maximum would be 2.5 months. So you do the 100 grand divided by 12 times 2.5, that gets you to 20,833. If you're an employee, so if you have an employee, that maximum is different. You do 100,000 divided by 52 times 24 weeks. The rules are different for owners. Hopefully that makes more sense. And I think that's the majority, without getting to the other questions are actually very specific, and I don't want to get into people's business online. So let's go. So again, I appreciate everyone coming. If you have questions, we're here to help. Leo helps quite a bit and leads our outsourced accounting. Our outsourced accounting services, we're helping folks across the board, from the applications all the way to forgiveness. I'm happy to answer questions, happy to do the forgiveness piece for folks. Happy to review binders or whatever pieces that you've created. And we thank everyone for joining, and please feel free to reach out and we'll try to answer all the questions we can. Thank you again. Leo, I don't know if there's anything else you want to add.
No, thank you everyone for joining. And once again, we are full service accounting firm. Here's our email address and phone number. And somebody asked where we're located. We are in Laguna Niguel, California. So, but most of us are, working remote now due to COVID. So we are technically in Orange County. So just get in touch with us. If we didn't answer your question today, feel free to email us. We will get back to you, next week. And also this webinar, if you want to look it back, you can still go to our website. Probably we'll post it on our website early next week. All right. Thank you everyone for joining. Have a great day.
Thanks all.